What's up everyone, my name is Ale. Welcome back to my world of stocks. In today's video, I want to address some of the most common questions and concerns that I've been getting asked very frequently in the comment sections of my videos. And some of the things that I keep getting asked is to share my thoughts on inflation, our rising interest rates, when I think those things may go away, our current recession, the possibility of an even bigger recession happening next year, and whether I think right now is a good time to be buying stocks considering how much they've already fallen by this year, or whether I think that things will actually get worse from here and therefore it might still be too risky to be picking up stocks at this time. Well, I figured rather than having to type a response to every single one of those comments individually, why don't I just jump in front of the camera for a few minutes and give you guys a response to all of those questions all at once. So that's what I'm going to do today. I hope you guys enjoy this video. Let's go ahead and talk about inflation, rising interest rates, recessions. We'll talk about those things first, and then I'll get a little bit deeper into stock market investing and share my thoughts and what I'm personally doing myself. Okay, now, of course, the inflation concerns come from the fact that we're sitting at the highest inflation rates that we've seen in over 4 decades, dating all the way back to the 70s and early 80s. Now, so far, it looks like we topped out at maybe over 9% in June before finally seeing it come down a little in July to around 8.5%. And we're still waiting on August numbers to be released, but those should be coming soon. But just looking at this chart, I mean, you can see why investors are so worried about it, as it's risen by a monumental amount following all of the lockdowns and resulting money printing that we did during the pandemic, which by some estimates have costed us over $5 trillion, which is even more than what we spent on the entirety of World War II. It's pretty crazy. And I'm sorry, but there's just no way that you can print and spend that much money without having to deal with gigantic inflationary consequences. However, that's not the only reason why we're experiencing it. Everyone in the comments section is asking me when I think inflation will drop back down to normal levels. Well, first you need to understand some of the other underlying factors causing the inflation before you can start to, make any kind of predictions about when it will end. First of all, part of the problem has been that supply chain issues that resulted from the pandemic and the lockdowns have been pretty bad. For example, China implemented a zero pepperoni policy that involves the strict lockdown of entire cities, even if only a handful of cases are reported. At times, that resulted in complete shutdowns of crucial factories that supply much of the world's goods, and partial shutdowns, at best. Keep in mind that China, just that one single country, is responsible for manufacturing more than a quarter of the entire world's products. So yeah, shutting down their factories and production, that's going to dramatically disrupt the global supply chain, which has resulted in less goods available at a time when the entire world has been, recklessly printing unbelievable amounts of money. So what you end up with here is more money and less goods, which makes the price of those goods go up, thus skyrocketing inflation. And to top it off, Russia essentially took advantage of the situation by choosing to invade Ukraine, knowing that inflation would get even worse for the Western world, since Russia is the second largest exporter of crude oil in the entire world, which, coupled with the closure of key pipelines in the US, led to the highest gas prices that we've seen in history, thus adding even more inflationary pressure on top of what we're already experiencing. Okay, so inflation is here and it's a very real problem. It's a very serious concern. So how do you combat that inflation, and when will it go down? Well, the Federal Reserve is now raising interest rates so that borrowing money gets more expensive, which means credit goes down, budgets fall, and consumers ultimately spend less, which results in prices eventually falling because of the decrease in demand. The problem, however, is that because our inflation is so insanely out of control, the Fed is now raising rates by the sharpest amount since the 1980s. Already we've gone from 0 all the way up to around 2.5%, and it's expected to get much worse than that, which I'll show you in just a second. But the thing is that throughout history, sharp spikes in our interest rates like this tend to lead to a recession because of the negative effects that it has on lending, spending, and investing, which heavily damages the economy and slows it down, thus causing a recession. Now, of course, we're already in a recession. I mean, despite how much the media tries to cover it up, at least in my opinion, but we had both Q1 and Q2 saw negative GDP drops, which has always been our common definition of recession, I guess until now. But the fear is that things are only going to get worse from here as interest rates continue to rise. This past week, for example, famous Johns Hopkins economist Steve Hanke made the prediction that we are in for a quote whopper of a recession next year. And he's not alone. Many other prominent economists have been sharing similar doom and gloom predictions for 2023 as well. Will the risk of a recession be enough, though, to convince the Fed to slow down their interest rate hikes? Well, with inflation as high as it is, I would say that it's not likely. In fact, the Fed themselves are basically telling us this already. Fed Chairman Jerome Powell recently stated that they will do everything it takes to get inflation under control, even if it means temporarily damaging the labor market, businesses, and even households, since allowing inflation to remain high would cause even worse damage over the long term. And we also had New York's Fed chief say that he expects interest rates to push higher above 3.5% and remain there throughout all of next year in order to push inflation down and restore balance to supply and demand. Chicago's Fed president too, he went even further than that, and he predicted that rates will be climbing to as much as 4% by the end of next year. So in other words, I mean, it's really looking right now like the Fed has no interest at all in supporting the current state of the economy, let alone the stock market, but rather their focus is on the long-term health of it, which involves doing everything possible to fight inflation. Unfortunately, that means that we're likely going to continue seeing volatility throughout this year and the next. And as a reaction, the stock market has been getting absolutely crushed. The S&P 500, for example, is already down over 17% this year and closer to 20% from its highs, while the tech-heavy Nasdaq is down even more at over 25% this year and closer to 30% from its highs, which makes sense since the Nasdaq is full of highly valued growth-oriented stocks, and that's exactly what's going to suffer the most during a period of rising interest rates where company earnings will go down, which raises their already lofty valuations, and growth is going to slow down as well, which will make them even less attractive. Kind of a perfect storm for those type of stocks to really struggle. So the question is, when will all of this end? When is the right time to be buying stocks again? How long should we wait? When should we be jumping into the market? I'm going to try to answer those questions and keep it as simple as possible for a short YouTube video here. But just keep in mind that, of course, anything can happen. This is all speculation on my part, but I personally feel that we have peaked on inflation, and I think we're going to be trending downward from here. It might be a little jagged, might be going up and down a little, but I feel the overall trajectory is going to definitely be downward from here. And the reason I feel that way is because of how strong of action we're taking to combat inflation. We're raising interest rates at the highest clip since the 1980s. That's going to slow down the economy. Meanwhile, consumers are very worried about the economy. I mean, there's a lot of pessimism out there. Everyone feels that we are in a recession right now, and there's fear that an even bigger recession is just right around the corner. You can look at any consumer type of survey out there. You will find that everyone is worried about the current state of the economy. Meanwhile, you have lockdowns being lifted all around the world. Factories are reopening. Even China is easing up on their zero pepperoni policy, and many of these factories have actually increase their capacity to try to meet the high demand that we've been having from the pandemic. And a lot of retailers have put in huge orders that got backed up because of supply chain issues. So now you're seeing a lot of retailers with overstock. I mean, we just had an earnings report from Target, one of the biggest retailers in the world. They said they had to put a bunch of stuff on clearance because of the overstock that they have that they're trying to get rid of, and it really hurt their profits. So what you have is you're going to have a decrease in spending, you're going to have an increase in supply, it's going to balance out, and inflation, I think, is going to get under control. Even when you look at like energy, even when you look at oil, I think eventually the whole Russia-Ukraine situation will get resolved. Hopefully, let's hope it gets resolved soon. But even in the meantime, most countries around the world are trying to find alternative sources to oil. I think that's going to get under control too. There's going to be some easing on that pressure. We've already seen some of that as well. So overall, inflation is actually not my biggest concern. I think from here it trajects downward. My bigger concern is rising interest rates, because I think that's something that's going to continue, and that can heavily damage the economy and, of course, the stock market even further. So then the question is, when do we stop raising interest rates, or when do we possibly even decrease them? Well, you don't have to ask me for that. I mean, you can just look at what the Fed has literally told you when they plan to stop raising interest rates. It's probably going to be sometime next year, maybe even to the end of next year. But in other words, it's going to continue for the next year or so. Eventually things will get under control though, and that's how I personally feel about it. Okay, you can have your own opinion on that, but I feel that these things eventually get under control. And at that point, I'd have to ask myself, well, what type of investor or trader am I? Because if I'm a short-term trader, yeah, I might be trying to time the market. I might be trying to find the lowest possible price in the stock market. Sure, I think things will eventually get better. I think inflation gets under control. I think the raising of interest rates stops, sometime next year, end of next year. And then after a recession, after a downturn in the economy, you tend to have an upturn. You tend to have an economic expansion following that. The stock market starts to recover. It goes on a bull run. So eventually things get better. But if I'm a short-term trader, I'm trying to find the absolute best prices. I'm trying to find the lowest prices. I'm trying to time the market. I'm trying to find exactly where the bottom is. Okay, for me personally, I feel that that is extremely hard to do. The market tends to bottom well before economists have any clue of that happening. I mean, usually the stock market bottoms before economists even call an end to a recession or the start of an economic expansion. So for me, instead of doing that, I prefer to be a long-term investor. And with that mindset, when I look at such a large drop in the stock market, I mean, I'm seeing some great companies with their stock prices being like cut in half in some cases. I'm seeing some great dividend stocks with yields that are at some of the highest levels that I've ever seen in their entire history. I mean, I'm seeing some great deals out there in the stock market. If I'm thinking long term, sure. If I'm thinking short term, yeah, things might get lower. Okay, maybe there's always a better price, right? A short-term trader will always have that mindset. There's always a better price. There's always a better price. Okay, but as a long-term investor, I'm seeing some great deals out there for stocks that I think could be trading much higher over the long term. So rather than looking at it from the perspective of, I want to get the absolute lowest prices on these shares, instead of looking at it that way, I'd rather look at it as prices are going down. My money can get me more shares. I can increase my ownership of these companies. So why not just look at it that way? Increase my ownership of these companies, become a bigger owner, increase the amount of shares that I have in my portfolio of some of my favorite companies out there. And then when the next bull market starts, I'm going to have much more overall shares that will help me get some bigger gains and some bigger profits all throughout the next bull run. Now, that's making some assumptions here that I have a stable job, I have a steady source of income, I have substantial savings for any kind of emergency. But as long as I have those things, why am I going to stress out so much about trying to find the very bottom of the stock market, which I personally feel is extremely, if not impossible to do? Why not just buy some stocks that I think are trading at great prices? I like to buy during downturns in the stock market. I like to buy during recessions. I like to buy during market crashes, during bear markets. We might, have a disagreement here. If any of you feel that it's better to try to time the market, or you know what, you could even look at it from a fair point of view, like, hey, there's a decent chance that things are going to get worse here in the short term. I'm just going to wait a little bit longer. Okay, fine. I understand that. I totally understand that. But that's just not my personal mindset. My personal mindset is, I see great deals, I'm going to be buying. Sure, I buy in small amounts so that I can buy throughout the entirety of the bear market. But I'm seeing a bear market here. I'm seeing stocks falling. I'm going to be buying. So anyway, that's just my perspective. That's how I feel about it. That's my overall strategy, what I tend to do myself. But I'd love to hear your thoughts down below. This is all just my opinion. I hope you guys enjoyed it. If you did, please consider hitting that like button. Subscribe if you haven't already. Those two things really help the channel survive and grow, and it means the absolute world to me. But let me know your thoughts down below. Are you buying stocks? Are you waiting? I'll try to respond to as many comments as I can. I'd love to hear your thoughts and opinions. Thank you so much for stopping by. It means the world to me. I hope you're all doing well. And I will catch you in the next video. Take care. Bye-bye.